Hello, ladies and gentlemen. Good morning to you all. So let's confirm we're all on the same page. If you can see my screen and you can hear my voice clearly, kindly type in hi in the comment section so that we can get the session started. So I want to see some response in the comment section. Okay. 882, good morning. 315, good morning to you. 265, good morning. All right. So I want to assume that we're all on the same page. Everyone can clearly see my screen and can clearly hear my voice. And if that is the case, then we should just get the session started. So I want to welcome you all to yet another promising session on Extra and Speed Live. Okay, 359, good morning. Thank you for that confirmation. All right. Okay, so I want to welcome you all to yet another promising session on Extra and Speed Live, hosted by myself, Sharif Daramola. And as usual, I will be taking you on a trading journey in the next 1 hour, where we shall be evaluating the financial market using technical parameters to identify trading opportunities lining up for us during the New York session today. Well, the first thing we are going to be doing this morning, as usual, is to look at, we're going to be looking at all the pairs we've been monitoring since Monday. We are going to be looking at how well the pairs are doing, after which I will be advising us on what's the next step we need to take, and if there are pairs that we need to negate, I will be letting you know, and if there are any developments, I will be sharing that with you during the course of the session. So I will advise us to stay tuned into the end of the session so that you don't miss out on any of this updates I will be dishing out during the course of the live session. And also, if you have any pair you want us to look at, be it commodity, currency pairs, cryptocurrency, um, stocks, whatever it is, feel free to drop it in the comment section, and I'll be using my technical skills to identify trading opportunities for us. So with that being said, let's dive into the chart and let's see what is happening in the market at this point in time. However, before I go into the details of what is going on in the market, I want to share something with you that I was able to see on the economic calendar for today, and that is a high priority event coming up, which is likely going to be affecting either the US oil and the Canadian dollar for today. And so what do we have for today? We have the Bank of Canada monetary policy report coming up in 3 hours. We also have the interest rate decision for the Canadian dollar coming up also. And we also have the rate statement coming up, and we also have the press conference coming up in between between 2 to 3 hours from this moment. So what this simply means is that this event is likely going to be having a major significant impact on either US oil and the Canadian dollar, and we want to get ourselves prepared for any outcome that is likely going to be coming up. So we're going to be looking out for technical structures on the chart to identify something that we might be hoping or anticipating as we monitor price action. So with that being said, let's dive into the chart and let's look at what is happening this morning. So the first pair we are going to be looking at today is definitely going to be the US oil as usual. And what has been happening on the US oil has been quite interesting, as throughout the course of since the beginning of the week, we have been having a situation where price action has been very, very choppy. Hence, we need to be very mindful and cautious, looking out for significant patterns that will be inciting either a bullish momentum or a bearish momentum. But before we go into the details of what is happening on the lower time frame, let's scale up to the daily time frame and let's have an holistic perspective of what is really going on in this market. And this is going to be also for the sake of those who are not part of the session at the beginning of the week, so we can all have an holistic view. We have the same perspective before making a decision on the pair. So going into the daily time frame, well, the first thing I was able to identify was that price action has been on a strong bullish momentum since the beginning of the year. I think sometime in the later parts of last year, we've been seeing our price has been respecting a uniform trend, and as a result of this, we were able to connect the series of higher lows here to give us that resultant bullish trend line. Then if we zoom into what has been happening in the last 5 to 6 months now, we also have a situation where price action has been going through a uniform downtrend scenario, and we can see we have the lower lows, we have the lower highs, and we can see our price action collapse right back into that bullish trend line. Though we had a breakdown of that structure during the later part of the month of September, but it appears that the bearish momentum here wasn't strong enough to hold bearish momentum, as we saw our price climbed right back above that bearish trend line, breaking out of that structure. So as a result of this, we were able to connect the series of lower highs here to give us that resultant bearish trend line, as you can see on your screen. And then the third structure I was able to identify here is the very important key level at the $86 mark. So let me zoom in so that we can see what I'm talking about closely. So we have the $86 level, and look at what our price action, look at how participants in this market has been relating with that price mark. So we can see if we go to as far as the month of August, we saw how participants gathered here to buy the US oil. And then if we fast forward into the first few days of the month of September, though we saw buying attempt from the participants in this market, but this was met with strong resistance from the sellers, as we saw how participants of this market pushed price below the $86 level, and throughout the course of the month of September, price has been trading right below the $86 mark. However, during the first few days of this month, we saw a significant breakout of that structure, and like I told you, this is I think a reflection of the decision of the OPEC Plus to cut oil production. And we all understand that when there is scarcity of a commodity or a product, definitely price is going to soar. And this is exactly what happened here. And we can see that we had this impulsive move 3 weeks ago, breaking out of that bearish trend line to incite a bullish momentum. So this is more or less like a bullish signal for us. We saw a breakout of the key level at the $86 mark, and also the breakout of the bearish trend line to incite a bullish momentum. And if we look at this structure closely, we saw this following an impulsive move like this. When we have an impulse, like, we expect that there is going to be a retracement at one point in time, and this is exactly what happened a couple of weeks ago, as soon as price got into the $93 mark. And remember, we took advantage of this bearish move a couple of weeks ago, and since then price came back into the $82 mark. And since price came back into the $82 mark, we've been witnessing a consolidation phase right within the 86 and the $82 mark in the last 2 weeks. And what this simply tells us is that there is an indecision in this market right now, as participants are yet to make a decision on where price might be leading to. And so as a result of this scenario we've identified here, I'm of the opinion that it appears that the retracement of this impulsive move appears to have ended, as we can see all attempts by the sellers to push price right below the $82 level in the last 2 weeks has been met with strong resistance from the buyers. And in addition to this, from a technical standpoint, whenever we have a breakout of a structure, we expect that price is going to come back, do a retest of structure to incite the second wave of that bullish momentum, which is exactly what happened last week. We saw a retest of this bearish trend line that was broken 3 weeks ago, and since then price has been caught within a consolidation phase. So the next thing we want to be doing on this chart is to look out for what is really happening within the structure. Since we have a consolidation phase, let's see how price action is transposing. Are we going to be having a situation where price will inside the second wave of that bullish momentum to the upside, or are we going to be having a situation where the breakdown of the $82 level retest of structure will be inciting a trend continuation to the downside? So these are the two scenarios we want to be looking at on our lower time frame, and in order to do that we want to scale down to a much lower time frame, that is the 4 hours time frame. And I think I have a chart here for the 4 hours time frame, so let's quickly have a look at what is really happening here. So we are on the 4 hours time frame right now, and look at the structure that I was able to identify here. Remember, we have the $86 mark. Sorry, hold on a second. So remember, we have the $86 mark marked out, and we can see that in the last 2 weeks now, price has been trading right below that $86 level. And what this simply tells us is that there is a strong selling pressure from this area. So this is more or less a selling niche for participants in this market. As we can see, every attempt by buyers to push price right above this level has been met with strong resistance from the sellers. And since the beginning of the week, we took advantage of this bearish momentum. During the beginning of the week, we saw the breakdown of the $85 level. Price came back, does a retest, and we saw price come back into our entry zone. And what happened during the course of the week was quite interesting, as we were able to see a structure around between the $83 level and the $82 mark. And what did we see here was a buying pressure. We saw every attempt by sellers to push price right below the $83 level has been met with strong resistance from the sellers, and this is giving us a clue that we might be getting ready for the second wave of that bullish momentum. But in order to take advantage of this bullish momentum, we really need to be very, very careful, as we are at a very critical point in the market right now. Remember, I told you that this is more or less a strong selling niche in this market. So for us to be buying this, despite seeing this demand zone here, for us to be buying this, we want to wait for a signal in the form of a breakout of the structure. That is, price takes out all the sell position here to give us that bullish signal. And when we cite a bullish signal, remember, we are not getting too excited. We want to wait for further confirmations to happen, which is likely going to come in the form of a retest of that structure, after which we look out for patterns on lower time frame to join the potential rally to the upside. So this is what we are going to be looking forward to, and since the beginning of the week we have been waiting for the setup to unfold. So at this point in time, there's still nothing to do in this market right now. We need to be very patient and wait for that bullish signal to happen to give us that confirmation that we want to be joining the rally. But if we look at what has been happening here in the last 2 hours, I think it appears we already have a breakout of the $85 mark, which I was able to identify here. And the reason why that is simply because since the beginning of the week, we saw selling pressure right below that $85 mark. So one thing I was waiting for is to see a breakout of that structure, which appears to have happened 2 hours ago, and the retest of that structure is likely going to be sending price to the upside. So we are going to be having a scenario where somewhere right above the $85 mark will be looking promising to join a rally to the upside. So why have I said that? Let me show you what I mean here. So now, following the last impulsive move after price rejected the $83 mark, we saw a situation where price came back into the $84 area. We saw a couple of rejection of this level before this impulsive move to the upside that broke out of the $84 mark. And what this simply tells us is that we are likely going to be seeing this as a temporary demand zone. And if that is going to be, let's label this area so that we can have a visual understanding of what our expectations are from this juncture in the market. So let me label this for the sake of clarity. So we have a temporary demand zone right within this level. And when we have a reversal pattern, definitely we want to see a neckline, which can be seen around the $84.50 level. Let me give this. Okay, so we have the $84.50 level here. I want to give this a different color so that we can differentiate it from the structures we have identified earlier. So we have the $84.50, right? So we have the $84.50, and let me place this at the bottom right hand side of the screen. Let me make this a little bit smaller. So we have the $84.50 level here. So if so like I said, right above the $85 level seems most appropriate to join a rally here. However, since we have a breakout of this temporary neckline we have here, and we saw an engulfing candle taking us right off of our structure, there is a possibility that price is likely coming back into the $84 level to give us a retest of structure before that bullish momentum continues here. So what I'll be saying here is joining right above the $85 level. Then if you can afford to have a stop loss of about 80 pips, then if price comes back into the $84.50 level and we start having buying pressure from this level, then we want to add more position to our existing trade here. So going into the New York session, we have two parameters that will be guiding our action. So the first one is the $84 level and then the $85 mark. And so let's see how price action is going to relate with both structure. So like I said, we have a breakout of the $84.50 level. So let's see if price will come back. But I'm thinking buying here is good. Above the $85 level is very good. Buying there is very good. Then if you could buy there, we have a stop loss of about, let me see. We have a stop loss of about, let's say minimum of 100 pips. Maximum of 100 pips thereabout. If you can afford that, you can buy from this level. And then let's see how price action plays out. And even though price comes back, drops below the $85 mark, we still have somewhere around the $84.50 level to look out for buying pressure. And if that happens, a breakout retest on our lower time frame will give us a leverage to add more position to our existing trade. And if price continues to go to the upside and we finally see a breakout of the $86 level, which is the very important key level we identified on the daily time frame, then we want to be looking at a retest to structure to add more position to our existing trade. So that is how we intend to trade the US oil for today. And where it's going to be our take profit target? Well, if we look at the previous structure we have here on the daily time frame and take into consideration this impulse leg here, we want to be projecting this impulse leg into the future using our Fibonacci extension tool, and then we aim at somewhere within the 127.2 and the 1414 area, which is somewhere around between the $100 mark, which is a very strong psychological level, and the $96 area. So we should be having our take profit target around here on a long-term perspective. So we have our take profit target here in a long-term perspective. Let's label this area so that we have a better understanding of what we are talking about here. So we have a long-term take profit target around this level. So as price continue to move in our direction, we continue to guide our position. So in the meantime, let's see how price action plays out. We could have our take profit target around the $88 mark in the meantime, and as soon as price move in our direction, we continue to extend our TP accordingly. So that is that on the US oil. If you have any question regarding what we've just discussed, feel free to drop in your inquiries in the comment section, and let's see how I can be of help. Let's see if there are any questions. Somebody said my voice is not coming. Are you really sure? Hello, can you hear me? My voice is, from my monitoring device here, it shows that my voice is coming out. All right, okay, let me see. Okay. Please, can someone confirm that my voice can be heard, please? I think it's okay from my end here. Okay, Innocent Babe said it's okay at one point. All right. Good morning, Great John. How are you doing today? 697, good morning to you. 820, good morning. All right, all right. I think my voice is okay right now. I think the audio quality is out right now, I'm very sure. Okay, Scott Benji, thank you very much. Scott Benji wants to talk to me. Okay. All right. So how do we make that happen? Leicester 6241. Okay, thank you for that confirmation. So I guess we'll move on to the next pair at this point. All right. Let me take some water. Okay. Okay, the next pair we are going to be looking at today is the US Tech. And for me on the US Tech, we have been quite profitable on the US Tech. How are you doing on the US Tech? Is anyone joining me on this trade? If you are, then kudos to you for being on this, as we are running with about how many pips in profit right now? Over 200 pips in profit at this point in time, and it appears that the market is going to be giving us a second chance to add more position to our existing trade. But for the sake of those who are not part of this family at the beginning of the week, well, let's quickly run through what our expectations were on the higher time frame so that they can be part of our decision for today. So let's quickly run through the daily time frame and let's see what we saw on the daily time frame and how we expected to trade the US Tech for the week. Well, the first thing we observe on the daily time frame is that price action has been on a bearish momentum, and as a result of that, we were able to connect the series of lower highs here to give us that resultant bearish trend line, as you can see on your screen. And even though price has been on a strong bearish momentum since the beginning of the year, there is something interesting here that happened, I think, since the month of June that gave us a clue of a possible reversal pattern. Now, look at what happened here in the month of June. We can see as soon as price got into the $11,000 mark, we saw buying pressure from that area. And what happened afterwards was quite interesting. We saw price go up into the bearish trend line, respect the bearish trend line, and we saw a situation where sellers took advantage of that bearish trend line to push price to the downside. But as soon as price got into the $11,000 area in the month of September, we started seeing buying pressure again from that area to give us a clue of how strong this 11,000 mark is. So what this simply tells us is that every attempt by the sellers to push price right below the $11,000 mark has been met with strong resistance from the buyers. And this is more or less a sign that we need to be very mindful of continue to put on a sell position on the US Tech. And for me, at this point in time, looking at the situation here in the last 1 month, I'm of the opinion that for us to be selling the US Tech, we want to see a bearish signal, which is likely going to come in the form of a breakdown of that demand zone. That's a bearish move that will take out all the buy position here to give us that signal. Then a retest to structure might likely give us a confirmation to join the decline. So if this is not happening, then we want to continue to look forward to buying opportunities right above this demand zone. As long as price remain right above this level, we want to continue to look for buying pressure to incite a bullish momentum. So because of the structure we identified here, we wanted to look at how price action has been relating to this current structure since the beginning of the week. And in order to do that, we needed to scale down to a much lower time frame. So we scaled down to the 4 hours time frame to look at what is really happening at this point. Now, scaling down to the 4 hours time frame, the first thing we observed here was that we have a situation where price has been going through a bullish phase in such a way that we have higher lows. Here we can see we had this first structure last week. Price found a higher high, then we had a higher low here, and it appears price is finding another higher high at this point to emphasize the strength of the buyers at this point in the market. So we had to connect the series of lower highs here to give us that resultant bullish trend line. So we have a bullish trend line as our yardstick for trading opportunity for this week. Now, at the beginning of the week, we saw our price started at around the $11,350, and then we saw price reject the $11,500 mark, giving us a channel. And since the beginning of the week, we saw our price has been caught within a consolidation phase. Remember, we took advantage of this move right from this level. We saw the breakout of the 11,250, and we saw our price was consolidating within the channel between the 11,500 and 11,250. So we saw the retest of the 11,250 and we joined the rally from there. And as at yesterday, I told you that if price continued to go to the upside in such a way that we have a breakout of the 11,250, sorry, the $11,500 level and a retest of structure, we want to be looking forward to taking advantage of another opportunity to add more position to our existing trade. So look at what has happened here in the last 24 hours. I think I should scale down to a much lower time frame. Let's go down to the 1 hour time frame. So before I go down to the 1 hour time frame, let me quickly share with you the other scenario we were looking forward to. Remember, we had a buy zone right around the 11,000 mark, and I said if at any point in time we were taken out of our position that we took advantage of yesterday, on Monday, I told you to move your stop loss to break even, and if at any point we were taken out of our position and price comes within 11,000 mark, remember we are not going to ignore the possibility of price still coming back to respect that bullish trend line. And we see reversal pattern here, breakout retest on our lower time frame will confirm a rally. But since then, price has not come down below the 11,250, so we want to be using the $11,500 mark as our yardstick for trading opportunities during the New York session today. So scaling down to the 1 hour time frame, what are we saying on the 1 hour time frame? So let me reset my chart and then let's see what is happening here. Let me zoom into the current structure. So like I showed you on the higher time frame, I told you that we have a situation where price has been consolidating between the 11,500 and the 11,250, and right now during the course of the New York session yesterday, we saw the significant breakout of the 11,500 mark, and then price came back to do a retest of structure during the closing session of the New York session, and since the early hours of today, we begin to see bullish momentum at this point. So what this simply says is that right above the $11,500 mark seems most appropriate to add more position to our existing trade, with a stop loss right below the previous structure. And what it simply says is, for those who are still in this trade, well, the market has presented us another opportunity to add more position to our existing trade right above the $11,500 mark. And for those who are not yet in this trade, who missed out on the opportunity we took advantage of right around the 11,250 yesterday, well, the market appears to be giving us a second chance to join the potential rally right above the 11,500 mark. So this is how we want to be seeing the US tech as we head into the New York session today. If you have any question regarding what I just explained so far, feel free to drop in your inquiries in the comment section while I take some few seconds to look at what is happening in the comment section before we move on to the next pair. Okay. Okay, from Nepal, good morning to you. Okay, so in the absence of no question, I want to assume that my explanation was quite clear. So we'll move on to the next pair, and the next pair we are going to be looking at is the XAUUSD, the gold metal, and we have been very profitable on the XAUUSD in the last 24 hours. Remember, it's this market started on a very slow note this week, and I told you yesterday that we need to be very patient to be able to take advantage of any opportunity this market is going to be presenting to us. And look at what happened at the beginning of the week. We though we had this bearish momentum where we saw our price rejected the $1,670 level, and we have been seeing bearish momentum since the beginning of the week. And one thing I said here is that we'll remain patient to see how price action is going to relate with the key level we identify at the $1,640 mark. And how did we get to the situation? Well, how did we come to identifying the $1,640 mark? Well, let's scale up to the daily time frame. Let's see what's going on the higher time frame for those who are not part of the session, so that we can all be on the same page on this one. So on the daily time frame, we observe that price action has been on a strong bearish momentum since the beginning of the year, and we were able to connect a series of lower highs here to give us that resultant bearish trend line that we have on your screen. Now, in addition to the current structure we have here is the very important key level at the $1,680 mark. And look at what has been happening here since the month of July. We saw how this level at one point in time was a buying niche for participants in this market. We saw as soon as price come into this level, participants in this market gathered here to buy the gold. Now, the same thing happened in the month of September. I think during the early days of the month of September, we saw another buying pressure here, but this buying pressure wasn't strong enough, as this was met with strong resistance from the sellers, as we saw our price broke down the $1,680 level, and throughout the month of September, price has been trading right below the $1,680 mark. And see what happened here. During the early days of this month, we saw a breakout of the structure. Price respected that bearish trend line one more time, and we saw a situation where price broke down the key level one more time to push price right below that level. So what this key level tells us is that the nature of the selling momentum here is very strong. As we can see, most of the time between the month of July and at this point, price has been trading right below the $1,680 mark, and this is more or less a sign that there is a strong bearish momentum here. However, if we look closely into the structure and see what has been happening during the later part of last month's trading session, we saw that the $1,620 level has been a buying niche for participants in this market. We can see every attempt by the sellers to push price right below this level has been met with strong resistance from the buyers. The same thing happened during the later part of last week's trading session. We saw, in fact, throughout last week's trading session, we saw buying pressure from the same area. So throughout this session, throughout the last week's trading session, we saw buying pressure from this area. And this is more or less a sign that buyers might likely take over the market from this area. So it has a buying memory, which we saw in the later part of the month of September. And as a result of that, we were able to identify this demand zone. And the next thing we did here was to look at what is really happening around this area to decipher if we should be getting ready for a bullish momentum in such a way that price might likely take us out of that bearish trend line, retest of structure to give us further confirmation to the upside, or we could be having a situation where a breakdown of this demand zone will give us a bearish signal, after which a retest of structure will be giving us a confirmation to join the decline to the downside. So in order to understand what is really going on within the structure here, we needed to scale down to a much lower time frame. So we scale down to the 4 hours time frame and things become a little bit clearer. So on the 4 hours time frame, the first thing we observed here was that as soon as price got into this demand zone here, we saw price action evolved into a reversal pattern in the form of a double bottom structure. So this is what we saw after the breakdown of the key level. We saw the first touch here, price came back, and we saw the second touch here, and we saw the breakout of that structure. So whenever we have a reversal pattern like this, the next thing we wanted to do is to identify the neckline of that structure, which shall be guiding our trading activities. So we identified the $1,640 level here, and then we looked forward to price coming back to retest that structure. So we had the breakout of that structure during the later part of last week, and during the course of the trading session this week, we saw retracement phases back into that structure. And one thing I made mention here yesterday is that we want to see how price action is going to relate with the 1640 level. We want to see buying pressure here on the lower time frame to join the rally to the upside. And if we scale down a little further into a much lower time frame like the 15 minutes time frame, we begin to see buying pressure right above the $1,640 level to incite that trend continuation that we took advantage of yesterday. So what we saw during the New York session yesterday was interesting. We saw price come back into the key level, remember, and then we saw multiple rejection of that level evolving into a double bottom structure, and that was a sign for us to join the rally. So since yesterday we have been on a very strong bullish momentum on this one, and right now we are in about, let me see how many pips in profit at this point. Let me scale back to the 1 hour time frame. I want to see what we have here. I think I'm having network issues right now as my chart is taking some time to load up. I hope we all stay with me. So let's see what's going on here. Okay, so I'm back on. So we saw the situation, and since yesterday we have been enjoying price movement from this area, and we are running with up over 2,500 pips in profit at this point in time. And that is, if you are part of this move, first of all, I want to congratulate you. Kudos to you for being on standby to take advantage of that impulsive move, and kudos also for being patient to wait for position to line up in our favor. And I hope Innocent Babe is in the house. I hope she took advantage of this move as well. Please let me know in the comment section if you took advantage of that move. And then what we saw here in the last 24 hours was also quite interesting. So we have a structure around the $1,660 level. We saw selling potential from here at the beginning of the week. We also saw another selling pressure during the New York session yesterday. And one thing I did here was to identify the structure, and I was looking forward to a breakout of that structure to take advantage of another position to my existing trade. And when we scale down to a lower time frame, I saw the breakout of this on a 5 hours time frame. I saw a retest of the structure, so I added more position to my existing trade here. So if you are taking advantage of that one too, kudos to you for being on standby to take advantage of that move. Now, for those who are not part of this position we took advantage of yesterday, that is, you didn't take advantage of this, you didn't take advantage of the second one too, let's see if the market is going to present to us another opportunity to join this potential rally that we have been enjoying since the beginning of the week. So right now we have a breakout of the $1,660.50 level during the early hours of today, which is more or less a signal that we might be in for another wave of bullish momentum. So if we have missed this move that we took advantage of, let's see if the market is going to give us a second chance in the form of a retest of this structure, after which we look out for patterns on lower time frame like buying pressure to join the rally to the upside. So that is one scenario we want to be looking forward to during the New York session today. So we wait for price to come back into the structure, then we could take advantage of a trend continuation to the upside. Then the other scenario we could be looking forward to, that is if price does not come this far to the $1,660 level, then a breakout of the bearish trend line we identified on the daily time frame is more or less another signal that we want to be looking out for. And then if a retest of that structure happens, then we want to be adding more position to our existing trade here. So let's see how price action is going to relate with the $1,680 level. Remember, this is a very significant level I was able to identify on the daily time frame, remember. So we want to see how price action is going to relate to that structure. So are we going to be having a situation where a breakout of the structure is going to happen? And if that happens, a retest structure should be giving us another position, another opportunity to add more position to our existing trade. However, if we start seeing reversal pattern right under the $1,680 level, that is, we start seeing selling pressure from this level, then we want to be seeing that as a bearish signal as we want to join the trend continuation to the downside. So that means we'll be taking out of our buy position with about how many pips? Let me see how many pips that is going to be. So if we have, okay, so we'll be having around 4,000 pips. So that means we'll be taking it out of our position when we start seeing selling pressure from that area. So this is how we want to be looking at the XAUUSD for the New York session today. So I hope we get ourselves prepared to take advantage of any of these possibilities that is likely going to be happening. So like I said, the setup here appears to be giving us what's it called, possibilities of multiple entries. So let's be on standby to take advantage of those multiple entries when they finally mature. So that is that on the XAUUSD. So the next pair we are going to be looking at is the XAGUSD, and we also have a similar scenario with what we have on the XAUUSD as well, as we've been enjoying this bullish momentum since yesterday, and right now we are running with about how many pips in profit at the moment? We have over 650 pips in profit right now, and if you are part of this move, kudos to you for being on standby to take advantage of this move, and also kudos to you for being patient to wait for patterns to mature before we want to join the potential opportunity the market has presented to us. So the next thing we want to be doing at this point is to lock in some profit at this point. Move your stop loss accordingly to your own desired profit, or move your stop loss to break even at this point, and let's see how the market is going to play out afterwards. Now, going into the New York session today, what is going to be our plans for the XAGUSD? As of this morning, I took advantage of this move this morning, breakout retest of the $19.50 level, and if you had not taken advantage of that move, let's see if the market is going to give us another opportunity in the form of a retest of the structure, after which we look out for buying pressure from this level to take advantage of this potential trend continuation structure. So that is one scenario we want to be looking forward to on the XAGUSD for today. And if price does not come back into the $19.50 level, then we want to be looking forward to a breakout of the $19.70 area, which is around here. We can see what happened here at the beginning of the week. We saw selling pressure from that level, and we also witnessed another selling pressure from this area as well, to give us a clue there are traces of sellers in this market at this point. So if price does not come back into the $19.15 level in such a way that we start having buying pressure here to incite this trend continuation, then let's wait for a significant breakout of the $19.70 area, after which a retest of the structure will give us a confirmation to join the potential rally to the upside on the XAGUSD. So this is how we want to be looking at the XAGUSD for today. So if you have any questions regarding what I've just explained so far, or you want me to share with you something or probably a structure on this, feel free to drop in your inquiries in the comment section while I move on to the next pair. So the next pair we are going to be looking at is the is it the USDCAD or the GBPUSD first? I want this to be in the order we treated it at the beginning of the week. Okay, so we're going to be looking at the USDCAD, and same thing is happening here on the USDCAD. We are very, very profitable on the USDCAD. Remember, we had the sell window identified at the beginning of the week, and we said we want to be seeing selling pressure around this area to join the decline to the downside. And to make our job easier, I was able to identify the 1.37 Canadian dollar level with a purple line you can see on your screen, and I said anywhere right below that level is going to be a good place for us to be joining the sell momentum here. And what do we have here? Since yesterday, we've been enjoying about how many pips in profit right now? Over 150 pips in profit at this moment, which is quite impressive for the Canadian dollar. And so what we are going to be doing right now is to move our stop loss to lock in some profit at this point. Of course, we don't want to lose out on whatever we have garnered so far in the last 24 hours. So what we want to be doing, we already have a structure right around the 1.36 Canadian dollar level, as we can see here. So we want to be placing our stop loss somewhere right above that structure, so that we can give breathing room for price action to play out itself. So after moving our stop loss to lock in some profit at this point, let's see if the market is going to be presenting us with a second opportunity to join the decline to the downside. Well, we had an opportunity here. We had a breakdown retest of this level here during the early hours of today, but personally I missed that opportunity. But if you are taking advantage of that opportunity, well, that is quite impressive. Kudos to you for taking advantage of that move, as you will already be running a profit right now. Well, let's see, for us that have missed that move, let's see if this market is going to be giving us another opportunity to add more position to our existing trade. But before we go into the details of how we're going to be doing that, let's scale up to the daily time frame. Let's really see what is happening here on a holistic perspective, if the current structure is still lining up with the expectation we started the week with. So let's scale up to the daily time frame, and what did we see on the daily time frame? Now, on the daily time frame, it is very obvious that price action has been on a strong bullish momentum since the beginning of the year, and we were able to connect the series of higher lows here. Hold on a second, to give us that resultant bullish trend line. Though we at one point in time we had a breakdown of that structure, but immediately price came back during the later part of the month of September to break above that bullish trend line, and since then price has been trading right above that level. Now, in addition to that current structure I just showed you now, is this significant level at the 1.32 Canadian dollar level. Look at what happened between the month of July and the month of September. We saw how sellers took over the market here. All buying attempts to push price right above that level has been met with strong resistance from the sellers, but fortunately for the buyers, during the later part of the month of September, it was successfully broken to the upside to give us a further bullish signal. And since that, price has been trading right above that level, and we saw a situation where price came to as far as the 1.400 level. And one thing that we observed since price got into that area is this multiple rejection of that level that we can see here, to give us a clue that there is a possibility that we might be having a reversal pattern here that will incite a retracement phase of the previous impulse leg that we have here. So the next thing we did here when we started seeing multiple rejection of this level is to take into consideration this impulsive move, and what we did was to bring out our Fibonacci retracement tool, run this along the impulse leg here, and we were able to identify somewhere within the 50 and the 78.6 area, as this is an area where I'm thinking that the retracement phase is going to end. So the next question was that, are we going to wait for this retracement phase to end before start looking for buying opportunities to take advantage of a trend continuation to the upside? Well, if we can have a structure around here like a reversal pattern, that will give us a significant signal that we can take advantage of a counter trend here. Why not take it? So in order to find what is really happening around this area, we scale down to the lower time frame, like the 4 hours time frame, to look at what is really happening there. And simple enough, on the 4 hours time frame, it was a quite interesting structure, as we saw multiple rejection of this level. We saw selling pressure from this area, and the next thing we did, we saw this engulfing candle that broke down the 1.37 area on Friday last week, giving us a signal that sellers are likely to come in the coming week. And with a breakdown of that structure, that is the 1.37 area, we are waiting for a retest of the structure. Look out for selling pressure around this area to join the decline to the downside. So this is how we took advantage of this bearish move. So this is what we are looking forward to, and price has continued to move in our favor. So now going into the New York session today, and for those who had missed out on this opportunity that we have taken advantage of, let's see if the market is going to give us a second chance to enjoy this decline. So right now, what we can observe here is this. We can say that price has broken down that bullish trend line we identified on the daily time frame. Remember, we had this bullish trend line on the daily time frame. Remember, let me show you one more time so that we can be on the same page on this. So we had this bullish trend line, and we can see here that the bullish trend line has been broken. And what do we expect whenever we cite a breakdown of structure? Of course, we expect that price at one point in time is likely going to come back and do a retest of that structure. So we have a breakdown of the structure here. we saw the bearish move breaking down the structure. So we have one scenario. We have two scenarios here. The first one is the possibility of price coming back to do the retest of that bullish trend line that was broken yesterday, after which if we see selling pressure here, then we want to be adding more position to our existing trade. That was the first scenario. Then the second scenario is if price comes back to do the retest of the 1.36 level. Remember, I showed you that we have a structure here on the lower time frame. We saw buying pressure here before the breakdown of the structure happened during the early hours of today. So if price comes back into the structure during the New York session today, then we want to be waiting for selling pressures to come up here. That is what is happening. I'm trying to, okay. So if we see price come back into the structure and we start seeing selling pressure, probably a reversal pattern on lower time frame, then we could actually join the decline to the downside from that area. So if you had missed out on these opportunities we took advantage of yesterday, well, I will be advising you to remain patient, and let's see if the market will be giving us a second chance on this one to take advantage of this decline. Now, our take profit target still remains right within the 1.32 area. So anywhere around here is good for our take profit target at this point. Remember, we are waiting for a trend continuation pattern around this area. We want to look for a double bottom structure or something like a reversal pattern that will be supporting a trend continuation from that area. So let's see how price action plays out in the next 24 hours. And definitely we're going to be coming back here tomorrow to do an update in that regard. So that is that on the USDCAD, and let's move on to the GBPUSD. So on the GBPUSD also, remember we were expecting a sell momentum on the GBPUSD yesterday, and we were actually taking out of our position in a loss yesterday. Hold on a second, let me show you what our expectations were yesterday. So as at the beginning of the week, though we've been expecting the bullish momentum since the beginning of the week, remember, and because of the structure we cited here at the 1.1400 level, we were thinking otherwise on this one. Hold on a second. Okay, so we're on the 4 hours time frame right now, and we can see how the 1.1400 level has been a major determinant of price action in the past. Look at this. So we have the 1.1400 level here. If we go back to the month of September, we saw how this level was broken to the downside. And from a technical standpoint, whenever we have a breakdown of a structure like this, we expect that price is going to come back and do a retest of that structure, which is exactly what happened. And since then, price has been trading right below that structure. Even during the course of last week's trading session, we saw that the 1.1400 level has a strong selling pressure, negating all bullish potential from that area. And as a result of that, we said we want to be mindful of how we're going to be trading the GBPUSD. And in addition to that 1.14 area, we had this temporary bullish trend line that has been guiding price action in the last 3 weeks. And what we did was to connect the series of higher lows here to give us that trend line. And we said this trend line is insinuating a bullish momentum. But because of the 1.1400 level, which has been holding selling pressure, we were mindful of taking advantage of that, as we wanted to wait for price action to actually take out all the sell position here by breaking out of the 1.14 area, taking out all the sell position here to give us that bullish signal. So this is what we've been waiting for to take advantage of a bullish momentum. However, when we scale down to the 1 hour time frame on Monday, what we saw here gave us a clue that the selling pressure here is still strong. So you can see what happened here at the beginning of the week. We saw another rejection of the 1.14 area, giving us a clue that sellers are still strong in this market, and the price action evolved into a reversal pattern here in the form of a double top structure. And then we saw the breakdown of the 1.1300 level, which is the neckline, and then we took advantage of that sell momentum. But unfortunately, the 1.26500 level was so strong for buyers that it took us out of the sell position as price climbed right above the 1.1400 level. So we were in a loss on the GBPUSD on this one. And remember what I told you last week, at the beginning of the week rather, that if we have a breakout of the 1.1400 level, That is a signal that buyers have come to stay. And we don't want to get too excited, as we want to wait for further confirmation that will be supporting that trend continuation to the upside. And so what did I say? I said if price breaks out of that structure, we want to wait for a retest of structure to join the rally to the upside. But the retest of structure never happened. But one thing we saw here was quite interesting in the last 24 hours. We saw a situation where price was caught within a consolidation phase, hereby giving us a bullish rectangular pattern, which is a trend continuation pattern as well. So we have the situation where price was caught within a channel between the 1.14850 area and the 1.14350 level. I did an update on this one on my TradingView platform, and we said if a breakout retest of the 1.14850 happens, then we want to be joining the potential rally to the upside. And this is exactly what happened on our lower time frame. We saw a breakout of that structure, we saw a retest on our lower time frame, and I took advantage of this move. And if you are actually taking advantage of this move, kudos to you for being on standby to identify the structure, and let's see if the market is going to present us with a second chance. So the first thing I'll be saying here is that for those who are taking advantage of this move here, what we want to be doing here is to move our stop loss to lock in some profit. You could either move it to break even at this point or lock in some desired profit right below the 1.15250 area, and let's see how price action plays out from here. Now, for those who missed this opportunity that we took advantage of here at the beginning of today, well, let's see if the market is going to give us a second chance in the form of a retest of that structure. So what we want to be looking forward to in the New York session today is a retest of structure like this, where we look out for patterns on lower time frame that will be supporting a trend continuation to the upside. Now, to make our job easier during the New York session, let us take into consideration this impulsive move, and let's identify our golden zone area. So let's bring out our Fibonacci retracement tool. Let's run it through the previous impulse leg that we have here, and we should be aiming at somewhere between the 50 and the 78.6% as an area we want to be looking forward for buying opportunity. So we have between the 50 and the 78.6. So we have, let's label this area as our buy zone. Okay, I think that's good. And then let's delete the retracement tool. So what I'll be advising us to do is this. Patience is very, very important here. So since we already have a breakout of the structure, and for those who had missed out on this opportunity, what I'll be suggesting us to do at this point is to wait for price action to come back into our buy zone area here, where we want to be looking out for patterns on lower time frame to join the rally to the upside. And this pattern on lower time frame will come in form of a reversal pattern in the form of a double bottom structure. It could be your head and shoulder pattern, it could be your falling wedge, whatever it is. Breakout retest of structure will give us a confirmation to join the rally to the upside. So right now we have a rejection of the 1.16 by the sellers right now, which also lines up with the bearish trend line we identified on the daily time frame. Let me go to the daily time frame one more time so that we can see. So we already have a sharp rejection of that bearish trend line that we have here. So price appears to be going to a retracement phase of that impulse leg right now. So let's see how price action plays out afterwards, and we remain patient and see if we are going to be having a breakout of that bearish trend line. So if at any point in time price chooses not to come down to this buy zone, and we saw that price breaks out of that bearish trend line, then a retest of that structure will give us a confirmation to add more position to our existing trade. So our take profit target still remains somewhere around the 1.175 area and the 1.18 area. And the reason we are going to be having that area as our take profit target in the meantime is simply because of the importance of that key level. We want to see how price action is going to relate to that structure. How we're going to be having a breakout of that structure, or are we going to be having reversal patterns here that will send price crashing one more time? So this is what we don't know. So we have our take profit target around that area in the meantime. So that is that on the GBPUSD, and let's see what happens in the next 24 hours. Then we'll be coming back here tomorrow to do a follow-up detail on this one. So it's 12 on the dot here, and before I call it a day, let's do a recap of what we have talked about so far. especially for those who are not part of the beginning of the session, so that they can have a preview of what our expectations are for the New York session today. So let's do a recap of what we talked about today. So the first pair we talked about today is the US oil, and on the US oil we continue to look forward to bullish momentum here, as I was able to identify a structure between the $84.50 level and the $85 mark. As I said, anywhere above the structure is good for us to buy the US oil. And if we finally have a breakout of the $86 mark, a retest of that structure will welcome adding more position to our existing trade. So that is that on the US oil. It's a very simple setup we have here. Then the next pair we talked about is the US tech, and the US tech appears to be giving us another opportunity to add more position to our existing trade. Remember, we took advantage of this move yesterday and we saw a final breakout of the $11,500 area, and if we have a retest to structure like we already have in the last 10 hours right now, so I said somewhere above the 11,500 looks promising to add more position to our existing trade on the US tech. Then we went on to talk about the XAUUSD, that is the gold. Hold on a second. We went on to talk about the XAUUSD, where we have been enjoying a very profitable trade, and we are running with about how many pips in profit right now? Over 2,700 pips in profit at the moment. And we had a second entry above the $1,660 level. And for those who had missed out on this trade yesterday, I said, let's see if the market is going to give us a second chance in the form of a retest of the structure, after which we look out for buying pressure on lower time frame to join the rally to the upside. And if price does not go that far and we see a breakout of this bearish trend line here, then a retest of structure should give us a confirmation to join the rally to the upside. Now we went on to talk about the silver, which also have a similar scenario with what we have on the XAUUSD, and the same thing here. We are running with over 650 pips. Oh, it's close to 700 pips in profit right now. And the first thing I said was to lock in your profits, move your stop loss to either break even or lock in some profit at somewhere below the $19.20 area. It's looking promising there. And let's see how the breakout of the $19.50 level is going to play out in the next 24 hours. And if we have a retest of structure at any point in time, we want to join the rally to the upside. And if price does not come that far and we sight a breakout of the $19.70 level, that is this, that is a breakout of the $19.70 level, this level here. Remember, we had selling pressure here at one point yesterday on Monday. We had another selling pressure here. So if we have a breakout of that structure, then a retest of that level should confirm adding more position to our existing trade here. Then we went on to talk about the USDCAD, where we are running in profit already, and at this point in time we have moved our stop loss to somewhere right above the 1.36 area, and we are looking forward to see if the market is going to give us a second chance. We said we had the breakout of the bearish trend line, which also lines up with the 1.36 level, and we said from a technical standpoint we expect that price might likely come back to do a retest of either the bullish trend line that was broken here or the 1.36 level that was broken. But the most important thing we want to see is selling pressure, and if that happens, we want to add more position to our existing trade here. And for those who are not in this trade, this might be another opportunity to join the decline to the downside. Now I just saw something here right now. I saw a structure here at the 1.351 area here. So if price does not go up and at any point in time we sight a breakdown of the structure and selling pressure here, we might want to add more position to our existing trade there. Then we closed the day with the GBPUSD, and though we were stopped out yesterday in a loss, this morning gave us an opportunity to join the trend continuation, as we saw a bullish rectangular pattern here as price action was caught within a consolidation phase right within the 1.14850 level and the 1.14350 level. And so we took advantage of this bullish move, and price action is currently running in about close to 100 pips in profit at this point in time. And for those who took advantage of this, I greeted you, I congratulated you guys for being smart enough to take advantage of that move. But one thing we want to be doing right now, especially for those who missed out on this opportunity, is to wait for price action to give us a retest of structure to join the rally to the upside. So we have two scenarios for bullish continuation here. The first one is price coming into our buy zone here around the 1.1500 level, somewhere around there. We sight buying pressure or a reversal pattern, then we could join the rally to the upside. And the other scenario is the possible breakout of that bearish trend line around the 1.16 area. So if that happens, we're not getting too excited. Remember, we want to wait for price action to give us confirmation in the form of a retest of the structure. Then we want to be joining the rally to the upside. So that is that on the GBPUSD, and I think at this point I want to call it a day. But before I do, I want to appreciate every single one of you for being around with me. I really appreciate it. It has been a wonderful time, and I'm glad that we remain patient to wait for the structures to line up in our favor. Remember, it was a very slow start to the week, as between Monday, Tuesday, we've been witnessing consolidation phase on most of these major pairs. And I told you yesterday that we just need to be patient. We don't need to give in to those compulsions that wants us to trade. By all means, we wait for price action to line up in our favor, then we take advantage of that move as soon as price comes within our structure, which is exactly what we did in the last 24 hours. And in fact, bravo to you guys. And let's see how my price action is going to play out in the next 24 hours too. Let's wait out for structures to line up in our favor. And like I used to say, whenever we have a breakout of a structure, we want to wait for price action to give us a confirmation, which is always and most likely going to come in the form of a retest of that structure. That is, if a breakout of a structure happens, let's wait for price to come back and do a retest of that structure before we want to be joining the potential rally or decline at that point. If price does not come back to give us a retest, that is, does not come back to give us a confirmation, then let's pass the trade. There are tons of opportunities in the financial market that we could take advantage of when we miss out on a move. So it's okay to pass a trade and wait for price action to actually line up in our favor before we want to be joining any potential rally. So on this note, I want to wish you best of luck during the New York session today, and I hope we are all prepared, as I was able to simulate all the possible scenarios that is likely going to be happening on all the pairs we were able to deliberate today. So on this note, I wish you best of luck. Be on standby to take advantage of that move. And to make things easier, you can always set your alert on your charts. We have there is on your extreme speed trading platform, there is this alert option which you can always take advantage of. You could set your alert. Once we identify a buy zone like this, set your alert for that area. As soon as price comes within that structure, you'll be alerted, and you can easily go in there and look out for the patterns you want to look out for to take advantage of that move. So I look forward to seeing you tomorrow on a very profitable note. I wish you best of luck today. Bye-bye.